Everyone, welcome back to my YouTube channel. My name is Charmaine Barnaby. I am a certified public accountant and I am the owner of CB Financial Limited, located here in Abaco, Bahamas. Now, today's video is a little different. I'm going to do a short tutorial on how to record a particular type of transaction in QuickBooks Online. And I know that for a lot of business owners, and particularly the size business or type of business you have, it can be confusing when it comes to certain transactions and how do you actually record that correctly in your QuickBooks system. So today I'm going to talk about or show you how to record the transaction if you have two businesses, two unrelated businesses that is actually collecting, and you're collecting funds from both businesses on the same bank account. So for example, if your main business is a construction business, and that's where you make most of your money from, and that's where your bank account name is in. And let's say you have another small business, let's say a very small restaurant on the side that doesn't have its own bank account, but you need to start depositing that monies, and you're depositing that monies into your main construction business bank account. So I'm going to show you how to record this type of transaction and also explain to you, the dangers of if you were to record it incorrectly as to how it can cost you money in taxes and cost you money in, analyzing your numbers, seeing money that isn't really yours or monies that didn't really happen for the business. So I'm going to share my screen at this time. And the company I'm using today is called Test Company Limited. And let's use that same example if your business is a construction type of business. And let's say the business is earning, $1 million, $2 million a year in gross income, and you pay all of your staff out of that bank account, out of this business and out of the bank account. And, all of the transactions is done through this one business. But you have another business that's a small takeaway, a small food restaurant, and you're now depositing monies from that business into your main business bank account. Now, the first thing that I want to do is show you that this is, like, I would say, a shortcut way. A shortcut way, but still the correct way, because it will give you the numbers that you really need. So go to bank deposit. And just waiting for it to come up. Okay, so when you go to bank deposit, I know that some people, when it comes to collecting monies and then depositing monies, you have to go through creating the invoice and then paying the invoice and then depositing it in the bank account. But in this type of transaction, you can go straight to bank deposit. And let's say your other takeaway business, let's say it made about $10,000 last month, in the month of July. And let's say, you did a one-time deposit in July for $10,000. And let's just assume you did that on the 27th of July. Okay. Now, one thing I want to explain to you, I'll just stop sharing for 1 second. One thing I want to explain to you is the accounting side to recording this type of transaction. And you have to understand what real revenue is and what it isn't. And revenue is monies that the business generated from its normal services. So if it's a construction business, then true revenue is from services such as selling labor, the time of the construction service, materials, anything else of the business. But let's say you are also collecting cash from anything else separate and apart from the business. That is not considered revenue. So just because you collected cash in your bank account or in that main business bank account, that is not revenue. It is just cash that you collected, and that's really cash that belongs to someone else. And really, when it comes to that, you call that a pass-through transaction, and any pass-through transactions is a liability because you're collecting it, but you have a responsibility to pay it back or eventually give it back to the original source it came from. So if I go back to my screen, that would mean if your business, Task Company Limited, which is a construction business, and your other side business, your other small takeaway business, deposited $10,000 in your bank account, you would have to create a liability because that is not income from your main business, but it's income from somewhere else that you know belongs to another entity. So it's an obligation to somewhere else. So you will have to create a liability account. So let's go to add new. And let's do this. Let's go to current liabilities. Okay. And among detail type, we can just call this other current liabilities. So let's see what would be a better fit. Okay. All right. So let's just make it simple. Other current liabilities now. And, you know, we can call this, if it's a food takeaway business, let's call it food takeaway business. Food takeaway deposits. Or let's say food takeaway income. You can call this anything that you feel is more, you know, more practical for you to look at. The main thing is that you make this a current liability. In no way should it be, called income. And I'll show you the dangers of putting that to income. So as long as it's a current liability, and you can name it whatever it is you want to name it. And let's say save and close. Okay. And let's call this, let's make the description monies, funds deposited, make it more correct. Funds deposited from food takeaway business. Okay. And we can go to there. And let's say it was I said 10,000. Okay. So $10,000 from that business was deposited in your bank account, in your checking account on this date. And here we have the transaction completed. And we'll save and close. Okay. So if we were to go to our bank account, in fact, let's go to our balance sheet. Let's go to our balance sheet. And let's look at how that actually looks in the bank account and on the balance sheet. So here you will see the checking account, and here you will see the food takeaway income. That is the correct way to record a pass-through transaction like that. Or like I said, if you're collecting monies from a separate entity, it should always go in as a liability. And if we were to go in the checking account, so the deposit is there. So while the cash is collected, it is there, but the other side to it should be the liability, because now you know that your construction business made its own income, but when this other money is from the food takeaway happened, then that is actually owed to another entity. So if we were to go to the profit and loss statement, there shouldn't be anything there. So there you see for the month of July, you know, there's no income recorded because the business itself did not earn that money. Now, if we were to actually do it the other way, if we were to record it as revenue type of income, let's do this. So let's assume we call it sales. We still call it food takeaway income. deposited, okay? With cash, and let's say that was 10,000. So when we go back to the profit and loss, that is sales, but that is not sales of the business. Because if you were to record that as sales of the business, that would definitely cause you to overpay in your taxes depending on where you are. Because I know where I am in the Bahamas, they tax businesses based on the gross income. So if you are collecting monies from something else that's not made from the business, then you will surely overpay in income. And then if you look at your profit and loss statement, it will show you that the business made extra monies that it did not make. And if we go back to the balance sheet, you know, the bank account would have increased by 10,000, but it's still assuming that other 10,000 was, you know, really is not a liability, because it helps you to see that, hey, this is income that didn't belong to the business, but belong to a separate business. You could also go to invoices and create an invoice. Let's say create an invoice. And, you know, if let's say we select a particular customer, choose a date, choose this, let's say sample service for 10,000. Now, I would call this the long way, but when it comes to the sample service, you would have to make sure that the service is linked to a liability and not income. So this is the long way, but I would clear this, come out of the screen. But I would recommend you doing it as a deposit. Okay, just as we did before. And I'll go back, we'll look at that same transaction. Go back, that original. Okay, so this is just a short tutorial, a short way to show you how to record those types of transactions if you have, if you're in that type of situation in your business once again. So if you have your main business and your main bank account, that is regular revenue. But let's say you have a separate business that doesn't have its own bank account, always record this as a liability, you know, because it will save you a lot of money. And it would also help you to analyze and see what the other business, how much other business is depositing in your other bank account. Okay. All right, so I hope that was somewhat helpful for you. That was a very short tutorial for you. And I am going to do a bit more videos like this, just showing you how to record those tough transactions in QuickBooks Online. And I know when it comes to those transactions, once you record it properly and you understand the accounting behind it and also how to do it in QuickBooks, those types of, you know, doing it properly can really save you a lot of money and a lot of headache. And hopefully it can show you that it doesn't have to be as difficult as you think it is, just as long as you understand the true accounting principles behind it all and the QuickBooks knowledge behind it all. So I hope this was helpful for you. Feel free to click the like button if you felt you learned something today. And also feel free to subscribe to my channel for more videos like this. And until next time, I will see you in my next video. Bye.